with several companies celebrating their first day of trading at the NYSE. That includes Bob's Discount Furniture, which rang the opening bell this past Thursday. The Connecticut-based retailer, which turns 35 this year, began trading under the ticker symbol BOBS and scored a winning session during its first session on the exchange. The company's CFO, Lukach, sat down with me to discuss the significance of this milestone moment. Take a listen. Stock Exchange.
We are so excited for this milestone. Really, it's all about our team, and the heart of Bob's is our team members. 5,800 employees, millions of customers, coast to coast. We have over 30 years of a brand heritage. So this means so much to the team members that have long, deep standing relationships with the Bob's brand.
What is the Bob's Way principle and culture?
It's honesty, integrity, transparency, and of course, a lot of fun. And we bring that to life in everything we do. We bring it in how we sell. We sell with no gimmicks, no promotion, and we always make sure the customer has full transparency on what they're getting. And really, value to us is about quality, it's about style, experience, and price, of course. And we are always the best price on the market, 20 to 25% below our competitors' listed price and 10% below promoted price. So we're always the best value in the market.
So many people have a special memory or connection to Bob's. They remember the commercials in the 90s and the 2000s. And a lot of people have reflected back to me that they feel like it's a local neighborhood store, but you're actually have locations across the country. How do you maintain that mom and pop feel while scaling at the level that you have?
We are coast to coast now. So we have over 200 locations, and we're in 5 separate regions: the West, the Midwest, Mid-Atlantic, New England, and New York. And the way we've scaled is always making sure the Bob's Way continues to expand as we grow our units. So it's keeping our core principles. The Bob's Way remains consistent, and we really just make sure that we're putting the customer first, delivering value without compromise. And we have so much growth in white space potential, over 500 locations by 2035. And our confidence in this plan is really driven by dots on a map for every one of those locations, our track record of opening stores, and we have really strong unit economics. So 60% by year 2, and 80% by year 5.
One of your mottos is that value is always in vogue.
That's right.
How do you maintain affordable prices and keep the quality high while scaling at the level that you're scaling?
It really is about how we built the business. That's what's unchanged for over 30 years. We buy narrow and we buy deep. So that strategy allows us to have less SKUs than our competitors and have a curated assortment. That gives us buyer power. We're able to reduce cost both with our vendors and as we distribute products through our supply chain. We've also, as we build density, we build even more buyer power. So it's just a really great way to maintain low cost and always give that back to the customer. That also allows us to be in stock. So 86% of our inventory is available to be delivered in 3 days. So the customer can not only get the product they want, but they can get it quickly in 3 days.
That's always a pain point when getting furniture delivered is the months-long waiting period. How do you get it, to customers in 3 days?
Well, we buy narrow and deep. So the inventory is on hand. 86% is available to be shipped when the customer wants it in about 3 days. So this really resonates with customers, and they're looking for an omni-channel experience. So not only do they want to engage with us in store, but they also engage with us online. So they go through both channels, and we make sure we give them an excellent experience in both channels.
How do you plan to allocate the capital raised in the IPO?
Post-IPO, we are going to be debt-free with a healthy balance sheet. We are a free cash flow positive business. We use our operating cash flow to fuel our growth. So the use of proceeds for the IPO will be to pay down the debt.
I know you mentioned growing to 500 stores by 2035. What will growth look like in addition to that post-IPO for Bob's?
It's the same growth we've done for 30 years. So our historical unit growth CAGR is around 12%. This is around 10% to get to 2035 by 10 years to get that 500 plus potential. So it's the exact same thing we've done. We're going to keep opening stores in our existing markets, our 5 regions. And we're going to couple that with new greenfield locations. So just last year in 2025, we expanded into North Carolina. and we're going to continue to grow contiguously down into the Southeast. So in 26, we're going to go into South Carolina and into Tennessee. So we're already seeing great success as we go down to the Southeast, and we're looking to continue expanding.